Good afternoon, everybody. My name is Greg Antipoff, and I am excited to be here for this Mobile Monday and share as much as I can with you. I have some slides. I'll pull those up in a minute, but just a couple quick things. If you have any comments or questions, make sure and drop those in the comment section during this feed. If you happen to be catching a replay of this, I will check back later tonight and answer any of the questions in the Facebook group, and then I'll follow up in about a week or so too for anybody who's catching the replay after today. All right, we're going to rock like that. Hopefully you're able to see it. Stop asking, is this tax deductible? So I'm Greg Antipoff. We just talked about that. And a couple quick things as we get started here. I'm from Waterford, Connecticut. That's where I'm coming from. I did meet some of you at the Region 4 conference. I was down there presenting in Savannah late last year. Once upon a time, I had my real estate license. That's a story for another day. But right now, nowadays, I present financial education for agents. And I have a signature framework I call the financial EKG. The purpose of why I'm sharing this with you is it's basically everything I teach on has to do with helping agents earn more money, keep more of what they're earning so that there's something left over to invest and grow into the future. So even though today we're going to be kind of talking about tax deductions and cool things we can write off to help you keep more of your money, secretly, if you do these things and you employ them correctly, it's actually going to help you earn more money in your business, okay? Couple quick disclaimers. So I am a certified public accountant. That's my certificate up there on the wall, but I'm not your CPA. So make sure you just check with all of your applicable financial professionals before engaging into this, engaging in any of this dangerous activity we're going to talk about today. And then we're not going to talk about any investments today that I believe, unless they come from the questions, but all investments involve risk. So let's talk about what is a tax deduction. I promise it's going to get more exciting than this, but let's just start with a few basic definitions here, make sure we're all on the same playing field, and then we can move forward. So a tax deduction, first we got to start by having business expenses, right? So a business expense is any cost of carrying on your trade or business. So in layman's terms, any money you spend as a real estate agent, as a real estate broker, money you're spending out, that's considered a business expense. Now, it potentially can be tax deductible if your business is operated to make a profit, right? I hope that's most of us on this call, but if you're somebody who happens to like running around with buyers and sellers and as a hobby, that's cool, but unfortunately you can't deduct anything associated with the business. So those are business expenses. So the IRS also says that in order for it to be deductible, it has to be considered ordinary and necessary. So in terms of ordinary, we're talking about common and accepted in our industry. So, and actually, just not sure if that chat is being blocked on the screen here. All right. Ordinary, so common and accepted in our industry, and then also necessary. So when we talk about necessary, we're talking about, is it helpful and appropriate in our trade or business? So let's break down an example here. In our business, we need leads, right? Whether that's something you purchase or you generate through your sphere of influence or through your marketing efforts, it's necessary in our business to have leads in order to get buyers, to get sellers. So that's necessary, but it's also ordinary in this business to spend money to acquire those leads. So whether you're purchasing leads directly or you're spending money on marketing efforts to procure those leads, those are all things that are ordinary and necessary. So if you meet those requirements, it's tax deductible in this business. So just to be clear though, because a lot of people confuse this, when we're talking about deductions, which we're talking about today, a deduction reduces the amount of income that you pay taxes on. So let's take a simple example. Let's say your gross commission income for the year was $125,000 and you had $25,000 of business expenses. That means that the income that you pay tax on would be $100,000. So we would then take your $100,000 and multiply that by your tax rate. Let's just say it's 20%. So your taxes in that case would be $20,000. All right, so that's a deduction. It reduces the amount of income before we apply your tax rate. That often gets confused with tax credits. So a tax credit actually reduces your income dollar for dollar on the amount of, reduces the tax you owe dollar for dollar. So you end up paying, your tax bill is less. So in that example before, Let's say that one of your purchases in your business was a new electric vehicle. Well, in an electric vehicle, there potentially could be a $7,500 tax credit. So in that case, that $20,000 tax bill we had would get reduced by $7,500. So $7,500 less that you actually have to pay over to the IRS. That's a tax credit. All right, cool. So that's the boring stuff. Let's get into some fun things. So the question I get all the time is this fill in the blank, is this tax deductible? And, or, hey, Greg, do you have a list of all the things that are tax deductible to real estate agents or brokers? And while I have a list, or I've had lists in the past, just because something is on a list or isn't on a list doesn't necessarily mean that it's tax deductible for you or that it's not tax deductible for you. So we're going to show a couple extreme examples here. So we're going to say 3D printer, Apple products, your kids, a tractor, hair and makeup, personal travel. So if you came to me as your accountant, or you went to your advisor, your tax advisor, and said, hey, is a 3D printer tax deductible? And listen, we're accountants. We're pretty black and white, simple-minded when we look at things like this. We're not very creative. So I'm going to say, well, okay, you're a real estate agent in my head. And I'm like, well, no, a 3D printer would not be tax deductible to you as an agent. It has nothing to do with your business. And so that's the type of response you're going to get. It's a yes or no question. And most of the time, if you were to ask any of these were deductible, you're probably going to get an answer of no. But instead, what if we stopped asking the question, is this tax deductible? And started asking, how do I make this tax deductible? That's the key to making all of this work. So let's go to our example of that 3D printer I mentioned on the previous slide. So I'm sure a lot of you, or most of you, give closing gifts, or you may give holiday gifts to your clients. Well, imagine if instead of giving some tchotchke keychain or of a house with your name and logo on it, what if you actually 3D printed their actual house and you gave that to them as a gift or even as an ornament, we'll say? They're going to proudly display that, right? And not only that, they're going to take pictures of it and share it with their friends. All right. And so now we've just found a way to take your 3D printer, which you wanted to purchase to do crafts or hobbies or for some other purpose. And we now found a legitimate way to write this thing off. But it doesn't stop there, because see, if you do this the right way, it's going to help you earn more money in your business. So not only do we get a tax deduction, but by your clients sharing pictures of this ornament on social media, it's going to lead to more referral business, which is going to help increase the income that you earn. And then for your client, every year in the case of the ornament, when they take that out and they proudly display it around the holiday season, do you not think that they're going to think of you when it comes time to sell that house or purchase their next property? Of course they are. So now, like I said, we found a legitimate way to write off this 3D printer. Let's talk about the tractor, for example, as another example, I should say. I had a client come to me, his name was Lee, and he said, Greg, I just purchased a new piece of property. I have to clear some land, clear some of the land on there. There's some overgrowth. And I want to buy this tractor. How can I make it tax deductible to my business? Cool. So now by asking, how do I make it tax deductible? It's forcing me as your advisor or your tax advisor to creatively think, how can we actually incorporate this in the business or not? So in Lee's case, I said, well, Lee, imagine if you go to your listing presentations, right? And in addition to your generic advice that you give along with a bunch of other agents of declutter the interior of the house, paint the wall, some HGTV gray, neutral colors, all this. What if part of your listing presentation, you said, you know what? I have this tractor. And what I do for my clients and my listings is I come over with my 2 teenage kids and we help clean up the outside of your house too. We improve the curb appeal of your house. And so right there, you've just set yourself apart from your competition. You are offering a service that nobody else is offering. Nobody else is going to do that in their listing presentation. So now you're making more money by potentially securing more listings. And it doesn't stop there, because now when you improve the outside of the house, the curb appeal, it's going to increase the perceived value of the house and perhaps increase the overall sales price of it. And now, by the way, we just found out a way to legitimately write off your tractor. Now, I'm not saying we're going to be able to write this tractor off 100%, but depending on how much you use it for business, there's a real deduction to be had there. So what I like to say is if you change your facts, you can change your tax. And the reason I say this is I'm not asking you to do anything radically different. You were going to go out and buy that 3D printer anyways. You were going to go out and buy that tractor anyways. But now, by changing the way we use it a little bit, now we also get the benefit of a tax deduction by doing so. And we're earning more money in the business. And the government, in turn, gives us a tax deduction as a reward for doing these things. All right. So let's talk about business versus personal expenses, because the whole idea here behind this is what personal expenses can we leverage in our business to make more money? Because if we're using these personal items in the business to make more money, then we can be able to write them off as a tax deduction. What I'm not talking about here about just buying random things and saying they're a business deduction. My overall goal here for you is to actually help you earn more money in your business, not simply to save less, to save more on taxes. Let's help you earn more so that there's more left over so that you can invest and build assets and have those grow into the future. So let's use the Apple suite of products as an example here. I think it's pretty clear that we know we need a MacBook or our computer in our business. I'm using the Apple suite as the example here, but we need a computer in our business to access the MLS, to add MLS listings, to do email and things like that. That's an easy argument. And same thing with the iPhone. We have to be able to text with our clients or be able to, take phone calls and things like that. Now let's think about the Apple Watch. You could buy an Apple Watch, and if you just use it for fitness purposes, then no, it's not going to be tax deductible to your business. But here's my argument when it comes to something like an Apple Watch. I think of realtor safety, right? We hear all of these stories of, when somebody was at a listing appointment or was at a showing or whatever it was, there was somebody there that made them feel uncomfortable. And that person waited for the opportunity to take advantage of that agent. Maybe when they saw them put their phone down on the kitchen counter and then go into another room. Well, I would argue that by having an Apple Watch, one that has the SOS feature, will do a bunch of things for you. Yeah, sure, you can check phone calls and text with clients, but it's also a safety device for you. So that if somebody were to do something to you, one, hopefully if they see that watch on there and they know you can still communicate, they won't try to pull a fast one. But God forbid they do, you have a way to send out a signal to, call for help or have somebody track your location. So in that case, I would argue that an Apple Watch is both ordinary and necessary. I mean, it's definitely necessary. It's not as ordinary yet, but I'd argue that it should be more ordinary in our industry, right? So that's an example there of how this Apple Watch you may want to purchase for personal reasons, we can incorporate into the business. Let's talk about hair and makeup. I get this one all the time. Hey, Greg, I'm a professional. I have to look good all the time. How can I write off, my hair, my makeup, my spray tan, nails, all of that good stuff, right? And so the not so attractive answer is, well, you can't just write that stuff off, right? But there is a way to do it, a few times a year. And here's the way I break it down. At least one time a year, you should be updating the profile picture you use on your social media, or perhaps on your business card, right? The running joke in this industry is basically it's like your high school picture on your business card and it's never been updated. So at least once a year, you should be doing a photo shoot to update those things. And so that's where I would say, yeah, on that day where you're going to get your photo shoot done, get your makeup done, get a haircut, get your spray tan, whatever the things are, because the purpose of doing those things was to look a certain way on a certain day for the purpose of doing the photo shoot. So that's why you had those things done in this case, right? And if it happens to correspond with a wedding you're going to that night or date night, well, that's an extra bonus. So I would say at least once a year, you can use this strategy. I would say the most extreme example you could use of getting away with using this strategy was perhaps once per month. If you're somebody who's constantly filming new or filming or taking pictures for social media. So let's say once a month you sit down and you batch shoot 20 videos for the month. Well, yeah, perhaps you would get your hair, makeup, and all of the things done for that particular day to look a certain way for the purpose of that photo shoot. So those would be sort of the extremes. I think once a year you can get away with this. And if you're somebody who's constantly doing new content, once a month batch creating, you could get away with doing this once a month. Or maybe you're somebody, maybe once a quarter, you do it to refresh your website or your social media. Another popular one. So how do I deduct my kids' travel, their amusement, their summer camp, their sports and hobbies? Well, unfortunately, there's no direct way to do that, but let's talk about what are your kids doing for you in your business, in the office? Are they helping you with cleaning, shredding papers, perhaps, or stuffing envelopes? What about at open houses? Are they putting up signs, hanging balloons, serving food? What about social media, helping you with your website, your photography, your videography? What else are they doing for you? Here's my point. If I were to do any of those activities for you in your business, you would have to pay me, right? Nobody's going to do that stuff for you for free, except we have our kids do it. So the whole idea is let's start compensating our children in our business for doing these things for us, right? And then instead of us coming out of pocket to pay for their summer camp, to pay for their flight to Disney or ticket to Disney, flight to Orlando or whatever it is, they will take their money out of their pocket to pay for the summer camp. So you get a business deduction in your business for paying your children to do all of these activities and anything else they may be doing. And then when it comes time to do those other activities, they're paying for it. So you're getting a tax deduction in the business for this. And oh, by the way, your kids aren't paying tax on this money anyways. This year, it's just over $14,000. If they make below that amount, first of all, they pay zero in tax. And if they don't have anything else going on, they most likely don't even have to file a tax return. So this is a great way to shift some of their money, compensate them, and get a significant deduction for doing so. And by the way, if they're doing all of these things, it frees you up to earn more money in your business by doing the thing that only you're most uniquely positioned to do, right? Let's talk about travel. This one excites a lot of people too. So let's take a look at the vacationer's timeline. You come to me and say, Greg, I want to take a 5-day trip. Is it tax deductible? And I say, well, what are you going to be doing on the trip? And you say, well, I'm going to fly out one day and then I'm just going to be sipping pina coladas poolside for 3 days and then I'm going to fly home. And I'd say, well, unfortunately, no business activity, no business deduction. But remember, we change our facts, we can change our tax. So now I'm going to give you the tax savers timeline. In this scenario, I'm actually going to give you a 6-day trip and make the entire trip tax deductible. Here's the way I break it down. So on the first day, on Thursday in this case, and I'm going to move this. I'm not sure if you can see that camera display or not, but I want you to be able to see what's on the slide here. On the first day, we're going to fly out on a Thursday, travel day. So the cool thing about travel days when we're traveling for business is the IRS says on any travel day, it's automatically considered a business day. So why is a business day important? It's important because it means we can deduct our travel, our lodging, our meals. We can deduct all of that on a travel day. And so now the next day on Friday, we're going to work for half the day, at least 4 hours. In the IRS's eyes, they say in order for a business day to be considered a business, travel day to be considered business, you have to work at least half the day. And in the IRS's eyes, half a day is 4 hours. Okay. So we'll talk about some examples of what that work can look like in a minute, but let's just stick to the timeline for a second here. And on Monday, you're going to do the same thing. I'm going to skip the weekend for a minute. We're going to work 4 hours on Monday. And then in the afternoon, it's pina coladas poolside again. And then on Tuesday, in this case, you can fly back home. Okay, so the weekend, why did I skip the weekend? Here's why. The IRS says if you have to work on a location, work at a location on Friday, and you also have to work at the same location on Monday, the weekend automatically becomes a business deduction. So that means lodging, meals, any transportation, that's all tax deductible over the weekend, even though you don't do any work. So in this case, we have a 6-day trip here. You've only worked a total of 8 hours and you were able to write off the whole thing. So let's talk about some of the things we can actually be doing here. So maybe when you were at a conference, like Region 4, you met other agents and you said, it'd be really cool for us to meet up again together. So we're going to travel to some destination we both want to travel to. And in the morning, we're going to have a mastermind for 4 hours. We're going to knock some things out and then we can enjoy the rest of the afternoon and the weekend. And then come Monday morning, maybe we'll go visit our local franchise offices. So if you're part of a national franchise, maybe you'll go and visit the local offices, or it doesn't even have to be part of your franchise. Maybe you're looking to build referral partners in that destination. And so you're going to go and meet with various agents in that location to build those referral relationships. And that's sort of some of the work activities that you can be doing there. So as we start to wrap this up here, remember, stop asking, is this tax deductible? And start asking, how do I make it tax deductible? Ask that question of yourself and ask it of your tax advisors. So with that, I'd love to open it up to any questions you have. There's a QR code there. If I don't get to answer your question here live, feel free to connect with me over on Instagram. I'd love to be your guide in all things tax accounting or finance related to being an agent or a broker. So you can connect with me there. And I'm going to jump over and see what questions we have. So I do have a question here. It says, how does one prove or document that they're paying their kids? Okay, so there's a couple things. If you have other employees or assistants, I would treat paying your kids the same way you treat anybody else. Meaning if you pay everybody else weekly, you're going to pay your kids weekly. And the same way you prove that any other employee did work is the same way you're going to do this. So let me make it practical for you. For your kids, I would just have them document either on whatever, how do I want to say, like whatever pay frequency you pay them. So whether it's weekly you're paying them or biweekly or monthly, just have them document what it is they're actually doing in your business, right? And then you know, if you were ever challenged in an audit, you can go back and see, hey, here was this week. Here's the open houses they went to. Here's the social media posts they worked on for me. Whatever it is, all of that will be documented there. So that's how you would do that. And then in terms of practically paying them, if you don't have any other employees and your kids are under the age of 18, you can simply just transfer money from your business bank account. We kind of didn't get into account structures and properly setting up your business in this conversation, but from your business bank account, wherever your account you use to deposit your commissions into and pay expenses out of, from that account, you will transfer money over to your kids' account. And then from there, your kids will then pay for all those expenses we talked about. And oh, by the way, the account has to be in the kid's name, but it doesn't mean they control it, right? You're still going to be a co-signer on that account. And so the example is, you know, they have a lacrosse tournament this weekend on the road. We have to travel. So we have to get a hotel room this weekend to go stay for this lacrosse tournament. In that scenario, I would take out one of my kids' debit cards and I would pay for that hotel to travel for lacrosse from their account. Okay. I hope that answers that question. If not, feel free to ask a clarifying question and I will dive deeper. All right. It says, do you have a here we go. Do you have a comprehensive list of realtor tax deductions categories and a general list of common items comprised within them? So I've had a list in the past. I haven't updated it in a long time, but this goes to basically what this presentation was about, with saying, listen, anything that you spend money on in this business, with the exception of very few categories. So meaning there's a couple categories where it's potentially not tax deductible, or it's not tax deductible, or the deduction is limited. Okay. So here's the thing, any personal expenses. So your personal clothing, unless it's embroidered with your business name, there's never going to be a tax deduction for that. Entertainment, no tax deduction. So when I say entertainment, I mean things like taking, like the Super Bowl is coming up this weekend. If you were to take a client to the Super Bowl, there is no tax deduction there. It's considered entertainment. More locally speaking, if it's a show or if it's taking them out golfing, those are considered entertainment and it's not tax deductible. But let's say you do go out golfing or you do go to the Super Bowl, any of the meal or drinks you have while you're there, you still get a meal deduction for that. Okay, the entertainment itself is not deductible, but any of the meals there. So after the round of golf, you go to the clubhouse and have drinks or food, or when the beverage cart comes around on the golf course and you buy something, tax deductible. Okay, so entertainment, not tax deductible. Personal expenses like clothing, not tax deductible. And the other one that would be limited is like meals. It's deductible 50%. Okay, it was 100% in 2022, in 2021, but we're back down to 50%. So my point is, other than that, anything else you're spending money on in the business is going to be considered a tax deduction. If you do want a comprehensive list, reach out to me, and I'll give you a list of what I have. All right. And it looks like, how about hiring your spouse and deducting medical expenses? I think it's called a 105 medical reimbursement plan. Okay, cool. So this is getting really deep here, and this is a very specific question, but I will cover it very high level, and feel free to inquire with me if you want additional details. But what the question is leading to here is, we may want to be able to deduct medical expenses. So first of all, if as somebody who is self-employed, if you pay for health insurance, that is a tax deduction that you get on your tax return. It's a dollar for dollar tax deduction for purchasing health insurance. Okay, as somebody who's self-employed, and that can be whether it's covering just you or if it's covering all of your family members. Now, there is something called a 105 Section 105 medical expense, which is basically if you don't have insurance or in conjunction with insurance, basically you can get reimbursed for all of your medical expenses by setting up this plan. And the way you can do it, you can't do it for yourself as a business owner. So you need to have, in this case, your spouse. You would hire your spouse in the business, offer this benefit to them, this 105 medical plan. So which basically means any money that they spend on medical, your kids or you spend on medical, can get reimbursed through the business. This is generally only a strategy we use for somebody who has insurance that doesn't cover most things, and you have very high medical bills. We would want to incorporate this plan to be able to write off a significant amount of your medical. And so with that, I think that will do it. So if you have any other questions, if you're catching this on the replay, drop the comments below here in the Facebook feed. I'll follow up later tonight in about a week from now. And if not, feel free to connect with me on Instagram. It was my pleasure being with you here today on this Mobile Monday, and I'll talk with you soon. Take care.